The use case for silver is excellent. I mean, look, of all the 92 naturally occurring elements, silver is the most reflective of light, most conductive of electricity. These are superlatives, especially in a high-tech world. So sure, I'm very bullish on silver from a use case. And because it's a small market, when gold really gets underway, silver could easily go to $200 an ounce.
So, Doug, in July 2007, the Fed began to cut rates, and gold jumped from about $675 to about $1,000 in March of 2008. In March of 2008, major cracks in the financial system began to expose themselves as Bear Stearns collapsed. At that point, everything started to plunge, including gold, which fell almost 30%. But it never fell below that price, that 675 price that it was at when the Fed first began to cut rates back in July of 2007. And then after it hit the bottom, which was higher than 675, it was like 700 or so, it was then off to the races. What does the movement by gold back then tell you from all that circumstance? And what are you expecting for the movements of gold this time around?
Well, when gold fell during past recent financial crisis, it wasn't because of a lack of confidence in gold. It was because people needed dollars to pay their debts. And they had to sell something that had a bid. So they sold their gold, not because they didn't want it, but because they needed something that had a bid. During the next financial crisis, debt-driven as it's likely to be, well, the same thing might happen. But at the same time, maybe it won't. Maybe during the next financial crisis, people will be so frightened that they're going to try to buy gold, even while everything else is falling in price. I can't make that prediction. All I can say is that I continue to accumulate gold, even at $2,500 an ounce. And at the moment, I think the place to be is gold mining stocks. Most of them are crappy. They're garbage. Gold mining is a lousy business. It really is. It's an idiotic business, especially today. But that's one of the reasons why institutions don't own gold. Most of the public don't own gold stocks, I should say. In addition to the fact they don't believe in gold, they hate the idea of gold. And the public is completely unknowledgeable about it. So the only owners of either gold or, for that matter, especially gold stocks, are people that are educated and really believe it. And there aren't many of them. These gold stocks are really, really cheap relative to absolutely any other financial asset, any other class of stocks. They're really, really cheap. So it's a great time to buy them if you think that that psychology will change. Psychology of the market. Human psychology doesn't change much, but the psychology of the market changes. So I think that we could have another runaway gold bull market at some point. After all, it's gone nowhere for over 10 years. Yeah, I'm quite bullish of it, despite the fact most gold stocks are really crappy and it's a terrible business. And I could give you a soliloquy about all the reasons why. And you can't invest in gold mines. Let me make that clear. You can only speculate in them. That's why Warren Buffett doesn't buy gold mining stocks. But still, if you want potentially super successful, high potential speculation, yeah, you should buy them today.
So in a recent interview, you stated three emotions typically move the gold price: prudence, fear, and greed. At the moment, only prudence is dominant, and certainly not greed or even fear, even though there's plenty to be afraid about. The public seems quite unaware that gold is pushing all-time nominal highs. The gold bull market will likely remain intact, at least until the public is clamoring to get in, and we're nowhere near that stage. Would you speak into that statement for us?
Yeah, it's true. We've look, people that go to school, take economics in universities, are basically indoctrinated with the fact that with belief, not the fact that gold is a useless relic. Even Warren Buffett says it's a pet rock. Makes no sense to take it out of the ground in South Africa to put it back into the ground in New York. Oh, this is all nonsense. So it's underowned on the part of the public. And the people that are buying it, including foreign central banks who are looking for an alternative to the dollar, are buying it out of prudence. And the next step will be fear when when retail price rises start going crazy and people get afraid and they see bad things happening financially and economically. Yeah, they'll start buying it out of fear. And when it really gets underway, then, of course, people will also buy it out of greed because, idiotically, most people only get involved in bull markets at the tail end when they're going hyperbolic, which they often do. And that's actually when you should be dumping them as opposed to buying more. But that's why most people lose money in the market. So right now, yeah, it's still a good time to buy gold.
So at the end of the 70s and the end of 2010, 2011, we saw massive blow off tops, hyperbolic moves. Are you expecting something similar to happen at some point into the future, whether it be, a couple of years or, a decade from now? Are you expecting something similar to take place with gold?
Well, I've been expecting that to happen for some time, and it hasn't happened, so I've been wrong. If you make a prediction, and of course, I don't really like to make predictions, but if you do and you're too early, well, actually, you're wrong. So things will change, I expect. When is hard to say. It's like saying exactly when will World War III start, which it will. Maybe it's already started. So these are kind of cosmic questions that are hard to answer. You just try to put yourself on the right side of the trade, generally. But the timing is necessarily inexact.
So the trend for gold changed earlier this year. It was in some consolidation period for 4 years or so. And now it's been on this upward trajectory. It had a moment of consolidation and it's busted through that again, but it's moving up again. Do you see this trend for gold continuing to go higher until something else stops it and alters its trajectory?
Yes, because gold is the only financial asset that is not simultaneously somebody else's liability. Now, Bitcoin is a very recent and unique financial asset, so we could put it in that category too. But basically, it's only true of gold. It's the only financial asset that's not somebody else's liability. You can hold it in your own hand. You don't have to rely on somebody else to make good on it. So yeah, the trend is going to continue.
So why, in the end, Doug, is it so critical, maybe more than ever, that everyone owns some gold?
Well, because if you own dollars, and of course we need dollars because merchants take dollars now, not gold. Okay, that's one thing. You need, but the dollars can dry up and blow away. They're being inflated out of existence. You want to own the right common stocks because some of the companies those stocks represent are going to be very successful and they'll go up in value. You want to own some real estate. But gold is an asset. You don't rely on anything else. And unlike real estate, which can be taxed, and the problem with real estate is that it floats on a sea of debt, which makes it very dangerous if that debt's liquidated. There's a lot of banks and commercial property found recently. Gold you own for cash is money in its most basic form. No, I think it should be a foundation of your personal finances. And now and people say, oh, well, maybe you should have 5% of your assets in gold. I think that's way, way too little today. Gold is cash. So you don't want to hold dollars, too many dollars for cash. I think look, I'm greatly overweight in gold. And I'm really happy about that. It's treated me very well. And actually, I might become more overweight in gold until the time comes when perhaps when Slime Magazine or Newspeak, if they still exist by then, which is questionable, have a picture of a golden bear tearing apart the New York Stock Exchange on the cover. And that'll be a signal to me to sell a lot of gold and buy common stocks. But we're nowhere near that today.
Samsung just came out with a new EV battery that will charge in 9 minutes. It uses so much silver that based on Samsung's sales projections, it will use about 67% of all available silver by 2030. Solar panels are being sold globally so quickly and contain a fair amount of silver in their own right that in less than 2 decades, solar panels are projected to use up all available silver supply. AI data centers are exploding and require massive amounts of silver. So do modern weaponry, which is expanding globally at a record pace. Then there is the electrification of everything, the movement back to a monetary metal by silver, and there's even more silver demand forces. Silver's in a supply deficit for the 4th or 5th straight year as production is relatively flat while demand continues to grow rapidly. Moving forward, is there enough silver to go around, and is silver setting up for some explosive move higher?
Well, silver is a much, much smaller market than gold in market value, but there's more of it mined. As I pointed out, gold we got about 90 million ounces of new gold coming out to the market every year, but we get about 10 times that much ounces of silver. On the other hand, all the gold that's ever been mined is in existence, but all the silver that's been mined has been used, like copper or nickel. It's basically an industrial metal. The use case for silver is excellent. I mean, look, of all the 92 naturally occurring elements, silver is the most reflective of light, the most conductive of electricity. These are superlatives, especially in a high-tech world. So sure, I'm very bullish on silver from a use case. And because it's a small market, when gold really gets underway, silver could easily go to $200 an ounce. In fact, in real terms, when it hit $50 an ounce, when did it first hit $50 an ounce? What year was that? 2000? I forget. It's hit $50 an ounce twice, hasn't it? In the past? Yeah. I'm not looking at a chart right now of it. But if it's just to go back to previous highs in real deflated dollars, it would have to go to $200 an ounce. So silver's underpriced now. It could go a lot higher. Sure. And it's not like new silver mines can solve the deficit problem because silver is pretty rarely mined just by itself. It's a byproduct, mostly copper mining, a
Mhm.
byproduct of gold mining as well.
I believe 2/3 of all silver that's mined comes as a byproduct.
I'm sure that's the case, yes.
Yeah. So, Doug, capital expenditures towards natural resources has been in significant shortfall for more than a decade. Are you expecting a pendulum swing in the capital expenditure cycle back towards natural resources? If so, is this an expected short or long-term cycle, and what are the implications for prices?
Well, if people want stuff made out of metal, it's going to have to be mined. That's end of story. And of course, people hate, but on the other hand, people want stuff made out of metal, from cars to things you eat with to everything's made out of metal, really. Metal or plastic, which is essentially oil. So they want these things, but they hate mining. They've been told that mining is evil, it rapes Mother Earth, it uses up our valuable natural resources. This is all bullshit. This is all nonsense. It's all hysteria. So it makes mining a very, very tough business. First you have to find a viable deposit, which costs millions of dollars to prospect for a viable deposit. It's like an Easter egg hunt, where usually you don't find the Easter egg. And then your troubles really start when you find something, oh, this might be a viable prospect, then it's going to cost you tens of millions to develop it and prove it up. And then your trouble really starts when you try to build a mine. Now you're talking hundreds of millions or billions of dollars. And this is where governments come in, and since you can't move the mine, try to extract royalties from you and definitely taxes. And then NGOs come in and try to shake you down. And then the natives, who wouldn't have known any of this was there, or looking to perform a shakedown. It's a horrible business. It really is, but it's necessary. And the mining stocks are so cheap right now that I think you have to buy them as a speculator, not as an investor. You don't invest in mining stocks. Oil stocks are better. Everybody hates oil even more than, I don't know if they hate oil more than metals or not. It's a good question. You have to ask some eco freak to tell us. But oil is a much better business for a number of reasons. But yeah, I'm very friendly towards oil and uranium too. That's another metal that has a great future for all kinds of reasons.
Well, why don't we go there? I was going to ask you that about uranium. What is your thesis on uranium? What are you expecting?
Well, nuclear power is unquestionably the safest, the cheapest, and the cleanest form of mass power generation. Now, I know people are clutching their pearls and in shock when I say that, but those things are all three quite correct factually. But the public has been trained, especially the European public, which are hopeless, to see nuclear as being horrible. But actually, it's the only way that civilization can advance. It's certainly not going to be with solar panels or wind power. I mean, these are fine for local applications, special situations, nothing wrong with them. And the technology has advanced in both of those, making them much more efficient than they used to be. But to power an industrial civilization, it's ridiculous. It's absurd.
So you're bullish. You're bullish uranium. Do you like just the metal, or do you like the miners as well?
The miners, once again, with all the caveats that I've laid down about gold mining, same is true of uranium. And when it comes to power, I also like coal miners. Coal miners are really cheap now. You can buy them especially in Australia, or everywhere, frankly. You can buy coal miners for 3 or 4 times earnings. You can collect up to 20% in current dividends on them.
Amazing.
Nobody cares. Because if you buy a coal stock, I mean, that must mean you're the devil. only the devil would own a coal stock at this point.
So the world is in its most precarious geopolitical environment since World War II. Given the current geopolitical climate, which commodities have the most speculative potential?
All of the ones we've just talked
The
about,
ones we mentioned.
all of them.
So you like copper, you like uranium,
Commodities,
silver, gold.
commodities are all very, very cheap relative to stocks and real estate at this point. They all are. And they all suffer the same basic problems. And some commodities have recently gone up a lot. I mean, orange juice has doubled or tripled, and cocoa has tripled or quadrupled, and coffee's doubled. Other commodities that are cheap actually right now because of a huge harvest, good weather around the world, are corn, soybeans, rice, and wheat. So if you want to speculate in a commodity right now that I think is going to work out really well, you can buy an ETF in any of those things.
Doug, this has been a wonderful conversation. Before we wrap up here and I ask you the final question, I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and every single expert interview that we conduct, just like this one. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Doug as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video. It's now time for our Golden Nugget segment, Doug. Let's discuss portfolio positioning. Understanding you're not a financial advisor, and based on all that we've discussed today and with your experience and your worldview as the backdrop, how are you positioning for the next 12 months? What assets do you like, and what assets do you absolutely want to stay away from?
Well, all the commodities and the commodity producers are excellent things to own, I think. And I'm not looking for just a businessman's return on them. I'm looking for the potential of 2, 3, 10 times. Gold stocks are quite capable of running 100 for one. In the past, I personally owned 2 that went 1,000 for one. That's a lot, and not over a course of a lifetime. I'm talking the course of a few years. So it could happen again. Anyway, the things we've talked about, that's what I own.
And staying away from?
Well, once again, we talked about this. Don't own bonds. That's the most important thing.
Okay.
With the caveats that I mentioned
Well,
earlier.
Doug, thank you for coming on to Metals and Miners and for being so generous with your time, your analysis, and your ideas. It's really been wonderful to spend this time with you. Would you please share with the viewers any important message you want to leave with those tuning in, where they can learn more about your work and how they can connect with you?
Well, I guess there's 3 things. First of all, we have a free daily blog at internationalman.com. So that's, I think it's quite worthwhile, quite good article every day. So subscribe to that. And on YouTube and those other like Rumble and so forth, I do a weekly or twice a week broadcast called Doug Casey's Take, which I think is often quite interesting. And the third thing is I have, in addition to a number of nonfiction books, but I think I'll draw people's attention to my fiction books. There's a possible series of 7, but the first 3 are done. They're called Speculator, Drug Lord, and Assassin, where we're trying to reform the unjustly besmirched, highly politically incorrect occupations as we follow our hero, Charles Knight, through life. So pick up those novels on Amazon. I think you'll be mightily amused. They're pretty good.
And then you're also on X, and you have a Substack called Crisis Investing, correct?
Yeah, so all of that stuff, right?
Okay.
And it's basically to, you've got to fill the idle hours someplace. I mean, somehow. So yeah, I do all those things. Don't really have to. Probably shouldn't, but it's just a habit that I've developed over the years. So what are you going to do?
Well, all of those links and URLs will be up on the screen for everybody to see and to click through and to get to all of your places. I will look for the Amazon link to your books, and I'll add that there too. Folks, if you are not connected and following Doug Casey, you really need to. We're talking 5 decades of experience in metals and mining. This is exactly the man you want to be following. His experience, his wealth of knowledge, and what he shares is something for all of us. I look forward to having you back on, Doug. Thank you for being here with us. And everybody else, thank you for watching. I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and every single expert interview that we conduct, just like this one. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe and receive the free gift on us.